Hey everyone, welcome back to the Mark Loeffler Experience. Today we are talking jobs. We had a record, not a record, but really high level of job growth or employment growth in January, 150,000 jobs. Before we get into that, I do want to ask every one of you to go over to my Instagram channel. I need you to vote on the name for Rob and I's new podcast, which will come out every Friday. But we do have the name. We have 3 choices. If you could go complete that poll, I'd greatly appreciate it. And I'm looking forward to seeing everybody at our event on the 27th at My Father Was Famous. Great networking. Anyways, let's talk jobs. So there was 150,000 jobs created in January. That's a heck of a lot of jobs. And let's be honest, the majority of them were in full-time. I mean, we had 63,000 in Ontario, 47,000 in Quebec, 21,000 in Alberta. And just for clarification, right? So that's 0.8% of the whole the whole job market in Ontario, 1.1 in Quebec, which, that's a bigger number, right? That's 30 to 35% bigger number than in Ontario, and in Alberta it was 0.9, so about 10% higher than in Ontario. Employment declined only in Newfoundland. And again, mainly full-time jobs, 100,000 of them, split evenly between men and women, and mainly between 25 to 54. So working age people. A couple of reasons we're talking about this today. Number one is that type of job growth would lead many to believe that, well, number one, we're going to see wage price inflation. Now, we're going to talk about why I don't think that's going to happen. Number two, that a lot of people will think that would mean we have a more robust economy than we actually do, which is debatable at this point. Yeah, and those are really the 2 points I want to cover off today. So let's talk about wage price or wage growth, which would, and why is that important? So wage growth is important for a couple of reasons. Number one is if we're sitting out there and, hey, there's 150,000 jobs being created and, which is a heck of a lot of jobs. So if you want a job, you have a job right now. But it's not like I'm going to go over there and say, hey, or somebody's not going to come to me and say, Mark, you're doing a great job there. I'm going to give you that same job over at this company for $20,000 more. No, why? And the other thing is the unemployment rate, even with that huge increase in job numbers, stayed the exact same. So what that means, as many people who joined the labor market found jobs, right? You understand what I'm saying? So we had all these people come in to the labor market, they found jobs. It didn't increase the unemployment rate, which then would not lead us to believe that we're going to see the wage price inflation that would typically happen if these jobs weren't being filled from somewhere, right? And who's filling these jobs? Well, I don't know if you've noticed or listened to the channel, but we did have like 450,000 people move into Canada over the last year. I would guess some of those people are taking up these jobs, which is explainable, right? And I'm just sharing this with you. Obviously, I own a number of businesses, always fun to get employees for, yet we are finding that there's talented people out there and we're not having to compete and steal from other people right now. Which in the pandemic, that was happening a lot. It was happening a shit ton where, somebody would come and, take one of our good servers and say, listen, we'll give you $5 an hour more. Or, we'll pay you an extra 10 grand a year and give you better shifts or do whatever and pander to that. Not that that's an issue, good for them. Yet, again, that would cause wage price inflation. And we know that the Bank of Canada right now, what is their goal? Their goal is to crush inflation back to 2 to 3%, right? In that range. That's where they're happy. That's where we're going to stay. So if they see wage price inflation, they're going to raise rates more. If they raise rates more, that's going to cause us to go into a more severe recession. Right now, again, I've been thinking that we were going to see another quarter point in March, but I think that the Fed in the US is going to do it and we're not going to do it in Canada. So we're going to start to diverge from the Fed in that regard because our inflation numbers came back much lower than predicted than the Fed. One of the biggest things that I with these job numbers that I want to see, I always want to see, is that it was 115,000 new jobs in the private sector, right? So that what that tells me is the public sector is not driving this job growth, which is what we don't want to see right now, right? We don't want that. That would mean that the governments are pumping money into the economy, that they're, inflating again and competing with the private sector, which we don't want to see. Okay, let's talk wage growth though. Hourly wages did increase 4.5% year over year. So, it was slightly higher in December, closer to 5% year over year. As you can see from this graph, that employment is rising fastest in obviously the landed immigrants and not born in Canada and not a landed immigrant. So people who are on work visas or permanent, comment down below. What does that mean? I guess I could Google landed immigrant, but I'd like you guys to tell me. So this little graph here just shows us where the jobs are coming from, wholesale, retail, trade, which to be honest with you, I thought that was going to decline, but apparently people are still out there shopping and they need extra people. Healthcare, social assistance. I mean, we know that the Fed has just or they've agreed, I don't know when it starts funding, on a huge new healthcare spending bill. Hopefully that will shorten wait times from forever to not forever. Other services, education, construction, accommodation, food services, information. And guys, keep getting out to those restaurants, especially our restaurants. We have a new one opening called Locksmith on Lock Street in Hamilton. So if you guys are around, check that out. It'll open up in March. Here's where we're losing some. Here's where we're getting some. And you know what? They kind of, go in and out, right? But these are obviously high, like a lot of these are high paying industries. Construction, I bet you we could have a huge increase in construction if we could find qualified people. But that's a story for another day, right? We'll put this StatsCan link in a pinned comment below. So if you guys want to go through it and you want to see more information and geek out on it like I love to do, kind of don't want to bore you with all that stuff. Biggest thing is we are growing jobs in Canada, number one. Number two, it's not affecting wage growth isn't as high as inflation, which is definitely coming down. They are kind of meeting in the middle because wage growth declined by 0.4 and inflation declined by more, right? So we're starting to level that off, which is great because we all got a little poorer over the last year if we didn't increase our salary by 10% or more. Why do I do these videos? I want you to follow the numbers. Just follow the numbers. See where the job growth is. That's where people are going to move to, right? Follow the numbers. If you follow the numbers, you'll do super well in real estate investing. All right, everyone. Hope to see you guys all next Monday. And make sure you go out and vote on the Instagram poll that's going to be out for the next 12 hours or so. And we're looking to catch up with you guys all soon. Have a great day, everyone. Catch you next time.